Hi, my name is Stan, and for the last 20 years, I've been trading on Wall Street. This channel here is to help you learn how institutional hedge fund players interpret the market data and look at the price action to enter and exit trades. If you're tired of losing money using retail ways, this channel is for you. Click the subscribe button. Tomorrow is one of the more important economic releases called non-farm payrolls. Why should you care? It doesn't matter what you trade, whether it's Bitcoin, SP500, or currencies, the markets are going to move tomorrow. Now, for us to be ready for the economic release, we need to look at the market as it is right now and prepare for different contingencies, whether the data is going to be good, bad, and or neutral. So let's take a look at S&P, let's take a look at Bitcoin, let's take a look at gold, and some currencies and see which ones are best to enter trades if we have some opportunities setting up for Friday and the next week. Let me show you how. So tomorrow with non-farm payrolls, let's take a look at all major markets and see what we can identify as potential trades and be ready for both good and bad releases. Right. So also tomorrow around 8 o'clock, 8:15, I will be 15 minutes before the release. I'll probably be doing a live event. So follow me either on TradingView or YouTube, wherever you're watching this. And we'll take a look at how to enter trades once the economic news hit the market. And you'll see how we do it live. In any case, so this is S&P 500. Today, we probed the lows. This was the, let me actually hop on the 1 hour chart. So obviously interpreting the price action tells you something what the traders are doing, what they're thinking, what they're going to do, and potentially obviously. And today was a very interesting day. We basically were ranging. This was I think 7 o'clock. This is the Asian traders and London Open traders also they bid up the price. And then when the U.S. came online, we took the markets down. We held the support and rallied into the close. Now, why is it important? Well, same thing happened on Wednesday. We sold off heavy, and then we rallied. Then we tried one more time to sell off, and now we rallied again. That means that the market is positioned towards the bullish side, not the bearish side, because something that is unable to go down has to go up. So for now, obviously, we're about to hit this resistance right here. But I wouldn't be taking any new trades regardless until the news hit the markets. We were actually long this thing for 2 days, and I took profits around 70 something. I think around 4, right after 4, somewhere around here. So we did a nice run. I've been making videos for the last 2 weeks telling you to buy, explaining why. And tomorrow with the NFPs, I really hope we see something like this. I hope maybe we're going to get some kind of retest of this breakout point, which will allow us to gather new buying strength, meaning more buyers will be interested now to buy at the discounted price instead of buying it here, to push the price upwards even more. Let's take a look at the 8-hour chart. So this was the steep sell-off of last month. And we are recovering now. I've explained ad nauseum why this bear market rally is happening, and today's breakout again confirms that we are in a bear market rally. It's definitely it looks like it has more room to go. So I'm thinking maybe we're going to see the 618 or even higher retest these lows. If we get good data tomorrow with the NFPs, this might be a very interesting trade. But you don't want to chase anything, so maybe if we get super lucky, we'll have Asian traders kind of drift the price lower, maybe start some action in London or or maybe even London traders will take it down. Now we might just see some sideways. And when the news comes out, if it's all positive and great, we'll have a rally. Now, does it mean that the markets will rally on the good news? No. The way you trade NFPs, you allow some time pass before you jump into the trades. Why? Well, because there's going to be a fake out move just to run stops of people who put bracket orders for the market news, and they usually get stopped out because the price goes one way, then the other way to run the stops, and then it does the real move. So to catch the real move, you have to wait 10 minutes, 15 minutes to see the fake out, spot the fake out. Then once you see the market turn away from the fake out, turn around, that's the real move. That's the one you want to jump in, because that highly possible that move is going to sustain itself till the end of the day. Now, with S&P, we are, like I said, so don't chase it here because you're right at the resistance. It makes no sense to buy it here for the price, just to see the price turn around and move lower, because your stop literally has to be either here or somewhere here. So why sit through this pain? Just wait for the small retracement in order for you to get into the price if you want to do it pre-news. Or, like I said, let's wait for the economic release, wait 15 minutes. Once you see the fake out move is over, that's when you can enter into the direction of the move, depending on what news come out. Again, I'll be doing this live, so you can hop on the live stream as well and see me do it as it's happening. So gold also had a very nice rally. I took profit because this is a double top at this point for now. And this was a very steep rise, as you can see. So I want some kind of consolidation like this, some sideways consolidation, and I have orders to buy at the retest of this trend line here as well, kind of like the S&P. That's why I said it doesn't matter what you trade, Bitcoin or indices or currencies, they're all intertwined, interlinked, interconnected. So very similar setups. You can take a look at New Zealand dollar, also has a similar setup, right? I traded this one too. I think I'm still in it. Yes. I'm still in New Zealand, but again, I'm thinking about maybe booking the profit because this is a steep rise, maybe a little bit of a drift lower, retest this previous swing high around 65.40, maybe 65.30 level, and then once I see a turnaround, go along there. Again, if you're doing this on London Open, you should trade only for a couple hours as a day trade. Don't stay in these trades for economic release news, because it's going to get volatile and it's probably going to run your stops. So, like I said, doesn't matter what you trade. It all looks very similar. Now, with euro dollar, you can see we're right against the resistance as well. So, depending on the news, we're either going to break out or go back into the channel. Let's take a look at Bitcoin. Bitcoin has been a pain in the ass, to be honest. I explained why this was a fake out and you shouldn't go short on this, and why the next move after this one was to run stops of these traders here. That's exactly what happened. We ran the stops and then turn around. And now we're back in this range. So with Bitcoin, I would stay away from this for now. Same thing with ETH. We've tagged the resistance again. We retreated, even though I believe that after 8 weeks of sell-off, we are due for a correction. It's still very pain in the assy, to be honest. That's a technical term. So I wouldn't touch this. I wouldn't touch this until you have a definite breakout. This is just consolidation nonsense. So if you're going to be trading it, trade from the extremes. So buy support, sell resistance. What kind of worked here, right? And buying support here worked as well. So let's see if the price gets here. You might want to think about buying if you start seeing some kind of reversal pattern pattern. Same thing here at the resistance. This is what else? What else we can? NASDAQ is looking great as well. This is all looking like a bull flag as well to me, right? So we cleared the previous, we cleared the channel, the downtrend channel. We cleared it. We took out the previous swing high, so we're making higher highs and higher lows now in a corrective in this bear market rally. And we had a nice breakout. We had obviously a very nice run, some consolidation, and then another breakout. So just like S&P, I would wait for a pullback and hunt for longs in London Open for a couple hours, and maybe afterwards I would hop on and trade the economic release news as well. And that's pretty much it. Let's take a look at the US dollar, the opposite of euro. So this was definitely a trap. We ran the stops above. We basically completed this head and shoulders pattern. So when it looked like this, when it looked like when we were somewhere here, I basically said, this is head and shoulders. We have a breakdown, and this is the target, and this is exactly where we went to this target right here. And we turned around. Basically, people who pushed this price lower took profits, and then we are now going back down. So depending on the news tomorrow, I think this is a very. I wouldn't touch the dollar pairs, like I said, before the news, because depending on the news, and it will be the direction of US dollar will be very dependent on the news that comes out tomorrow. So I would stay out of the US dollar for now in all of the pairs, unless you're already in the profit, then you can set your position to break even. That way you don't lose any money. But I think the more interesting aspects would be the indices to trade. So if we get this classic breakout, retest, and continuation pattern, that's the one I would be most excited about trading tomorrow. As always, if you like the content, please like, subscribe, leave a comment. Why? Well, because the algo sees the activity and it helps to distribute this video to other new users who might find it helpful. So we would appreciate if you would do that. In any case, more than welcome to stop by ApexBull.com. There's a link to our free Telegram group there. Stop by, say hi. We can discuss all of this. We are there all the time. Hope it helps. Enjoy.